Good morning, everybody. It's Chris here from Serene Education with the 4 majors NAST update for the 15th of March 2013. Hi, folks. End of week. It's a Friday. I don't know where times go. But let's have a look at the end of week charts for the euro against US dollar and the 3 other major pairs. So let's have a look and see what the week's been doing so far. You can see quite clearly here on the 1300. Price has moved down over the past number of weeks through February in particular, after this bearish engulfing candle at the institution moving average here at 13,600. And as you can quite clearly see, the last 2 weeks now in particular finding support at this 1300 now. And the wicks, a lot of wicks, but the body is very, 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 very tight. So very hesitant to drop lower than 1300. And that is reflected on our daily time frames. You can quite clearly see, here we go, quite a mess at 1300. You can see on a number of occasions price actually dropped lower. However, we can see this backwards and forwards. In particular, what happened yesterday, I think a lot of people got caught with price shooting lower towards that 12,900 towards the institution. However, price actually pulling back, and now through yesterday, and then finding a bit of support. And you can see on the Asian session last night, price now finding and moving higher on that 1300. That's going to be reflected on our 4-hour time frame. You can quite clearly see there's my 1300. You can see prices be moving backwards and forwards between these 2 points. So lots awesome shorting opportunity here after these 2 exhaustion candles at the institution. However, as prices moved lower, here you can see the move as of 1 o'clock GMT yesterday. Price actually stalling in it, a long wick to the upside, to the downside. Apologies, a lot more buying sentiments in that candle, and sure enough, we had this huge move to the upside from going right through until the 5 GMT yesterday afternoon. That taking us above the 1300, price pulling back, finding support, and you can see in the last 5 hours, price actually moving higher on the Asian session, closing higher than this little consolidation we saw yesterday's high. So now as it stands, you can see the institution is the next port of call for this particular pair, but as long as it maintains above 1300, there's more likely for price to head higher. And if it's going to go higher, it's going to go towards this area consolidation here, not too far off, at between the institution and 1305. So it needs to get above 1305 in order to see price moving towards this, the long-term trend, intermediate trend to the downside. But you can quite clearly see that since the early part of February, this particular pair has been ranging, a very, very messy range. And if you are trading this intraday, you would have to be very, very aggressive in your placement, your target levels, etc., and your stops. And to be honest with you, it's not really worth trading. It's very, very speculative, very indecisive, and it's all happening at a major support and resistance level. So we should look to our weekly to get a nice bullish or bearish candle away from our 1300. And if that's the case, then you have to literally give a whole week away in order to get to that signal. So you could be spending a bit of time being very patient, but in trading, it does pay off. So you can either choose to be quite aggressive and try and trade this intraday at a major support and resistance level, or you can just back off and say, okay, great, I'll give it a week, get my decisive candle, and once I've got that, then start looking at entries, etc. So at the moment now, you can quite clearly see very, very indecisive for the euro. So in my eyes, not really worth trading. On to sterling. Let's have a look at the week. You can see quite clearly this 14,850 mark. Long-term support and resistance from these lows here back in 2009 to the current high through September of that same year. You can see my February tracement areas have been plotted here in the red dotted. Here are the starts of this year. On my weekly, you can see a nice exhaustion candle at a major support and resistance level here in the shape of the 16,200. Price failing to really rally above that. I hadn't gone above that level since the whole part of 2012 in particular. So long exhaustion candle followed by bearish engulfing really dictated we should be looking for downside. That happened. First target towards the 15,700. That being reached, broke below the bearish engulfing. Next target was going to be the 15,300. A long-term support and resistance going way back to 2010. That didn't even get in its way. It didn't even stop for that. The momentum was so great, and all those figures coming out of sterling, not really good for contraction. Everybody was screaming third dip recession. Our production figures were lower, not really looking good for sterling. And break of 15,300, we should have looked at that 14,850, which happens to be a early 2010 price support and resistance level, which it did on the fib retracement anyway. So 1485 support was bound to be found here, and sure enough, you can see that this week very, very positive as we headed into that area. And there on the daily, you can quite clearly see a lot of indecision followed by this decisive candle yesterday, and now as you can see, price is heading back towards that 15300. In between all this, we've had the 1505, which is the 100% fib projection on our weekly. That was reached and it's trading above. So now what we can do is look at the 15200 intraday as our first target towards the 15300 ultimately. So looking now, you can either trade aggressively against market trend, but you'd have to be aggressive with your entries and stops because you are trading against the major trend, as you can quite clearly see, which is negative. All my moving averages and my temp is telling me I should be looking for selling. However, and on the daily today, you can see I've got a blue arrow, apologies. So it's telling me that on my 4 hour and my hourly, I should be looking for buying sentiment. The institution on my 4 hour is below price. You can see price going sideways over the past 20 hours or so, but nice buying sentiment coming through on the European session open, and we should be heading higher. Hourly candle, you can quite clearly see the hesitation, all happening above 1505, all the moving average below price. So you can see the buying sentiment after going to 1485 on my hourly. So as it stands now, we should be heading in towards or looking towards that 15200 mark as our potential trade. As you can see, that price has hesitated at this level before we will ever see price making that 15300 its next target. So near term target could be the 15200 intraday, and look to put your stop below the 1505 in my eyes as price heads higher. Ideally, I'd like to see a nice bullish engulfing close on a 13-minute chart here above all this, but as it stands now, all this buying sentiment, look to target 1520 intraday. Onto the US dollar Swiss franc. Let's have a look at this particular chart on the weekly. There we go. You can see a lot of hesitation through September, November, December, January. A lot of indecision for this particular pair. On my weekly chart, you can see price has been in a major long-term negative trend for a number of years. However, through 2011, we saw a nice bounce. Price has been moving higher. Come unstuck at the 1000 mark here at the institution, and then price has fallen, and since then making its way to the downside, swing low, swing low, swing low. However, going into the new year 2013, you can see price has now found support, consolidated support, and is now moving higher. And near term, you can see price actually breaking these price support and resistance levels here, preferably the one in 940, which has happened to be a major support and resistance level. And you can see the last week in particular finding support. Near term, you can see prices pulling back now to the support. So ideally a breakout, a pullback, and then we want to see a continuation in the direction of the trend. You can see we had one here back in November of last year, a nice break of a prior consolidation high. We saw the pullback, which was this indecision candle. This candle here this week needed to now found support and to push higher. However, that failed to materialize as price broke and traded lower. So this week, if it's pulling back, we want to see 940 now becoming the new intraday or daily or intraday support. So my daily, I want to make a note of that 940. There we go, which is the institution. Price is spending more time above the institution near term. Before it wasn't. We had a face. This is that false breakout I told you about on my weekly breakout candle, but failed to actually bounce on that. You can quickly see on a number of other occasions at 940 prices being quite or has found resistance through September, October of last year, again through December, again through mid-January, and now you can see quite clearly near term price being quite bullish. The US dollar's getting a lot of strength recently and breaking through that institution moving average and moving higher. However, near term, the last couple of days, we've seen price hesitating now at 950, and yesterday's bearish engulfing candle has looked to see price now moving in the opposite direction. So near term, if it continues to fall, we should be looking roughly around the 940, 140, 200 mark as we head back towards the institution. As long as it maintains above the institution, though, on our daily, it should still start looking to gain strength. Okay, we saw on our weekly chart, we saw price breaking higher. We want to see if there's any pullback. It needs to maintain above 940. If it maintains above 940, then look to see if you can actually get in at the low end to buy into the upside move for the foreseeable future. So going into the next week, let's look to see if price can maintain above 940. And if you can get above 940, then let's look for buying buying opportunities in that direction of the trend. So here on my 4 hour, very, very messy. A couple of days ago, you can see price was making those highs and now making those lows. Very bearish engulfing candle yesterday at 5 o'clock GMT. Price taking all the way back, not finding support above that 950. But as I mentioned to you, the longer price stays above 950, there's more likely for price to actually start building on that. Okay, so we'd like to see price giving us a nice daily bullish engulfing candle, if anything. and then we start looking for entries to the upside or downside. Last pair of the day is US dollar Japanese yen. Let's have a look at this particular pair on a weekly, monthly chart. You can quickly see here's my monthly chart of this particular pair. Very negative trend since 2007. Price really, the US dollar really falling against the the Japanese yen, and through the latter part of 2011, price was actually stalling at 76, moving sideways, not really going any further, and then we had this almighty push to the upside through the latter part of the early parts of 2012. A nice bullish engulfing candle here at the end of February, and all of last year moving higher, but then sideways for a long period of time, and then we saw the buying sentiment coming through in October of last year. And since then, every consecutive month since October of last year, you can see price making higher highs, and most importantly, going into major support and resistance levels in the shape of these fib retracement areas from the all-time high in 2007 to the low 23.6. Price actually moved into that high point on a monthly chart. The next month broke above it and moved higher, and subsequently over 2 months moving into the next fib level at the 38.2, which is our near-term resistance. However, you can see price pulling back this exhaustion candle, and then this month in particular moving higher and trading well above the 9400. Now it needs to maintain above 9400, and then we should be looking for that all-time goal towards the 100 mark, which is above us here, which happens to be the 50% retracement area now at the highs in 2009. So all that, looking at our daily, 9400 is at near term 38.2. See price moving higher tentatively. The last couple of days, this week in particular, very indecisive. A lot of spinning tops, a lot of indecision dojis. Okay, we don't trade indecision, we don't trade dojis. We trade bullishness, and that's what we want to see now. Bull candle above the current high here at 90. This consolidative daily high at 95.50, and once we get that, we get a nice bull candle. That will confirm that we're still looking higher, and you can see quite clearly through this period here, the 20 period moving average I think is a nice support. We'd like to see that happening now. Get a nice break to the upside, a nice bullish engulfing candle on the upside of 95.50. Then we should be looking for that long-term target at 100 above us for the near-term future. So my 4 hour, I want to be able to mark that 950 in. You can quite clearly see that 950 is plotted on my chart. There we go. There's the 950 mark, and as long as price stays above that, then we should be looking for price to move higher. Just make a note, this failure we saw yesterday at 5 o'clock GMT is lower than the prior one, so we are seeing a hesitation here. Price is not making higher highs. It needs to be trading above, ideally, the 960 in order for us to see any positive movement to the upside for the foreseeable future. Do we wait for a nice bullish engulfing candle to close above that? Preferably yes, because if not, we're looking to trade a consolidative range. The longer it goes sideways at the top of a trend, there's more likely for price now to hesitate at this level and to fail, and then we should be looking to the downside. If that had to happen, we would need to see a break below 950, this 95.50, and then we would target the 9400, which is the prior major support and resistance level, or the institution moving averages. You can quite clearly see here on my 4 hour time frame. So patience is a virtue. You don't want to trade noise, rather see a break of the high of 96.6 or a break of 95.50 to look to the downside or to the upside. That's for today, guys. Just want to make you guys aware we are seeing a bit of news today. In particular, we've got the EU Economic Summit, day 2. Day 1 was yesterday, so we have a full day, Friday. So it's a long weekend for most of us. If you don't want to be trading speculation, rather stand aside. We could see a lot of volatility because of the fact that we are seeing a lot of these the financial ministers all attending the economic summit in the EU. We also have the Eurogroup meeting, same thing. What else we got? We've got European CPI year-on-year figures this morning. That's going to be quite an important one. We see no change on there on both the core CPI and the CPI year-on-year figures. That's very, very important, because why are we interested in that? Quite clearly, it's a consumer price account for majority of overall inflation. We need to be aware of inflation and what it's doing, because as long as interest rates are kept low, there's always going to be a chance for inflation to start running away. So it's a juggling act. What the financial ministers have to do for our economies is to try and keep our interest rates at a level where our inflation is also at a level. So it's almost like a balancing act, which is important. It's something that needs to be aware of, and you need to keep an eye on it. So they're expecting, the 1.8 percent is low than the February 2%. So it'll be interesting to see what happens on the euro for that. Then we've got core CPI figures for the US market. So that's also going to be quite interesting. And then this afternoon, we've got the industrial production month-on-month figures for the US market. They're expecting a positiveness. We have seen a lot of growth, a lot of positive news coming out of the US. Are we going to see further positiveness coming out for the industrial production month-on-month figures? That's going to be quite interesting. We've also got those long-term purchases for the US market. Very, very important. So the previous figure was 64.2 billion. They're expecting 39.3. So a bit of a contraction on that particular one. But very, very important to actually be aware of this, because obviously if you are seeing if you are seeing growth in your countries, you want to see these figures being better or greater than the prior forecast. So one to watch. So there's a lot of news out today, especially for the Eurozone, but also for the US market this afternoon. Factored into your trading, guys. As well as that, also please look at your money management and the strategy templates. If you are using this particular template that Serene Education has taught you, please follow the rules of it and follow it with the right money management. Okay, it's so important to back up your strategy with sound money management, because if you don't, then it's worth nothing. Okay, I'm talking from experience, and if you don't listen to anybody, then you're going to be also experiencing it. So please follow the rules, back up a sound money management, and you'll find that you'll be a lot more profitable going forward. Other than that, it is a weekend. Have a fantastic weekend with family and friends. Chill out, relax, take it all in. If you've done well this week, well done. Pat yourself on the back. If you had made mistakes, please look at them, address them. Don't say, okay, well, I failed, and look to the next trade. Look at the reason why you failed, figure out why you went wrong with it, and then apply it to your next trade or your trades going forward. If you don't learn from your mistakes, you will never get over your mistakes. Very, very, very important. Okay, so if you failed this week, take it aside, make a note of it, and work out why you failed. So important. Okay, part of learning is you need to understand where you've gone wrong, and then you need to apply that to your trades going forward so you can get it right. Okay, other than that, I'm going to stop talking. Have a fantastic weekend with family and friends, and I'll see you on Monday morning. Until then, trade serenely.